Hey, Sad Nation, what's going on? I hope everybody's having a wonderful weekend. I am here making another video again. I attempted to record this earlier in the day, however, my mic was on mute and it did not have any audio. So we are here again. I have tested it and it works. So, anyway, let's get into it. First and foremost, this is for educational purposes, not financial advice. You are responsible for your own actions. What we're going to do in this video is that we're going to do a quick little recap of what happened on Friday, yesterday, and really kind of just talk about the power of one, P1, and what it really means and what it can do for you, and how powerful it can really be, because a lot of people don't really understand what it is and the power of what being consistent and using very minimal money can do for you, right? So with that, let's get into it. So what you're seeing right now on your screen is SPY, ticker symbol, on the 5 minute chart. And this is my own color scheme. So white candles are up and blue candles are down, right? So white means that they are bullish and blue means that they are bearish. Um, but let's go along. And if you look at my chart right now, you will see a lot of markings on it, right? So this may be a little bit busy for a lot of people, right? A lot of people might just like to have a blank chart like this with, a couple lines at most, or they may just like to mark off, something like this and like say this is supply, and down here is demand, etc. Right? To each of his own, right? It's whatever works for you. This works for me, and I have seen that it works for many of you that are in the nation. If you're new to me, go to Stocks After Dark on X.com, formerly known as Twitter, and you will find me and you will find my analysis that I provide to everybody for free on a daily basis. With that said, I will show you what I put out on Friday morning pre-market around 7:30 ish, right? So I will show you, and you know, let me just paste this on here so that you can see it. This was my analysis Friday morning. What I want to show you, I will cut this down a little bit more so we can see the text, but I want to show you this so that you might not be able to see it. But anyway, you can see two charts here, right? Let me just kind of zoom in on the chart that I had for here and show you. That way you can see when I gave my analysis out where price was in correlation, right? Right. So I mean, you can see this, right? I mean, this, you can see, TS pivot 2, TS pivot, etc. Right? You can see this trend line right here, which is right here, and you can see that price is below. Right? So price was below the 50% and the intraday. So this was around, I believe, like 7:30 ish, give or take a few minutes. So price was right about here, like 7:38. I actually think it was right about here. And I was saying that I expect. Let me see. I will show you. Watch. We will go here and tell you what I was looking at. So, like I said, it's gonna be a recap video, and then we're just gonna talk about analysis and what I provide to you all, to the community, and then eventually we will get into the actual, power of one theory. So, look, you can see this, right? I said watch for an attempt by the bulls between now and New York Open. New York Open is 9:30 U.S. Eastern Time to push above the 50% on the daily, which is right here, and then intraday pivot, which is right here. And then I'm going to say it's going to test this downward trend line right here, along with the monthly 50%, which is right here. And then I said this will be an attempt on this falling wedge pattern. This is the trend line for the falling wedge, and the other one you can't see because it's further down. Right there it is. There's a line, just in case you want to see it. And I'm like, if they can break out the daily high, which is right here at 445.55, is next, followed by TS pivot, and then the weekly 50%, and then TS pivot 2. And I said that's being the area where the shorts get their turnaround. TS pivot 2, and you see that price hit here, and then that's when we started the descent down. I mean, failure at any of these points, and you can take down PM lows. Obviously, PM lows around 443.8. I should have been a little bit more clear in referencing, somewhere in this vicinity. But nonetheless, we said PM lows and then into DS pivot and then eventually into daily lows, swing lows from August and DS pivot 2 and DS pivot 3 being the absolute low, right? That was pretty much at 440, right? That would have been made a massive move, but it did not happen, nor did we really expect it to happen, right? That's just the kind of way it is. But look, like I showed you, I tweeted this out right around here. So on futures, a lot of people took advantage of it during the futures, right? Trading ES or NQ. And they were able to get a massive movement out of this, right? In fact, if I go to ES, we can see, right? So tweeted right around here, you can see that, price around what 444 and ran it all up to 447, 4477, right? So 30 something points, right? 30 something points. 1 point is 4 ticks. So it's about 120 ticks, which is massive, over $1,000 a contract. But anyway, let's go back to SPY. So futures, you could take advantage of it, but nonetheless, you could take advantage of it if you were trading equities and whatnot. And there are some brokers out there that will allow you to trade SPX options in pre-market. I know that a lot of you probably don't realize that, but you could. But anyway, if you were not able to capitalize on pre-market, you could have taken advantage during the open, right? Because I was on a live space telling the people there that I'm long already, and that I was going to take it to that 44.64 and 44.70 on ES, which would have been right around. First, it would have been here for SPY, and then here for SPY on ES. So that was the first play, and then I said, look, I kept saying the 50% is where I'm watching for a pullback or a turnaround, along with here, right? So we could have made the move up, and then we could have made the move down, and then that's all she wrote. But the most important part is, one, look, if you follow me on Twitter, you get this analysis every single day almost. And it's very similar to this, meaning that you will get something that will almost play out like this, pretty exact. But let's get into the real part of this video, and that's called the power of one, right? P1, power one. And what that is, let me just kind of give you a high level overview what that means. It's not meaning you take one contract and whatnot. It really means several things. One, it means be patient. Be patient with trading. Be patient with the setup. Be patient with your profits, right? Because a lot of time people get impatient. They might be like, oh, I see price coming up here as a pivot. Oh, I see coming down. I'm gonna get in, and not realize that it was a false move. And they should have waited for maybe the push higher, because at this point in time, the market momentum was bullish, right? It was very bullish. There was really absolutely no signs of a real reversal at this point. And that is why I say be patient, right? And be patient with the profits. I mean that be patient with what you see in gains, right? A lot of people want to come into this market, into this profession, into this industry and make, tens, if not millions of dollars in a day. Or, even in the course of a year. And it doesn't mean that it can't be done. It just means that, how you get there, when you get there is really the key. And that's why I say be patient, right? Be patient with the setup. Be patient with your trading. Let your trades come to fruition, right? If we knew that this TS pivot was what we're looking at for the turnaround for the bears, we knew that we were going to get a good movement back, right? It wasn't just going to go from 447 to like 446.5 and that's it, right? We knew that we probably can get at minimum a $1 move, right? 447 to 446 flat. And then if we saw more continuation, we can get at least another point and a half, right? That's just kind of how the markets move. Even on tight consolidation days, you might get, tight movements. And then I can give you a perfect example. Right here. Here, for the sake of this video, right here, right? This was Thursday, September 5th. This was a tight consolidation day, but you can see that this still gave you a fair trading range, right? So this is, $1.89. Obviously it's not ideal for equity trading and whatnot, but for options trading, this is more than enough to give you, 50 to 100, 200%, depending on the expiration and the timing that you got in, right? Everything is tradable. It's a matter whether you should trade it or not. And that's subjective based on the person trading. Now back to our example. So P1 again, power theory 1, right? Is that wait for the setup, wait, be patient for your gains, and just be patient in general. Like you don't have to, trade every single day, every single minute, every single candle. There are going to be opportunities all the time, every day, everywhere, and it's just being patient with it. So with the power of one, it also tells you to size to an appropriate level that you can financially handle, which will then translate into what you can mentally handle. A lot of people want just to size very heavily because they're hoping to hit that jackpot right in the middle, right away, and be done, right? And then continue to repeat that every single day, right? But reality is that that's not how trading works, and most certainly not how it works for a lot of people. But the power of one lets you size to a level where you can, sit through pullbacks and you can sit through trades that actually don't go your way and let it stop you out and not crush your capital, right? Not crush your account and allow you to come back another day or allow you to trade again in that same day. Power one also means to be consistent with your trading, right? Don't trade $5,000 in one trade and then go 10,000 next trade and then go down 1,000 the subsequent trade. Right? It means go same size every single trade. And the reason why I say that is because as traders yourselves, you probably can sit there and say that you probably are actually right more often than you're wrong. And the problem is the times you're right, you cut those winners out very quickly for a smaller profit. Then you cut your losers out for a bigger loss. But if you were to be able to take for example, a trade for $100 every single trade, and you win 3 out of 5 of those trades, assuming that you take one trade a day, and you cut, and they're all for the same percentage in terms. Let's just say you're winning 100% on each side. You lose 100%, you win 100%, right? But if you lose 2 out of the 5 trades for $100, you're down $200. But if you win 3 of those trades for $100, now you're up $100, right? $300 minus $200, net profit $100. But what happens is if let's say you take 5 trades and the first 4 trades are $100, you win 100%, right? You won $400. Now that last trade you take is, let's say you win $1,000, and you lost, you lost 50% on that. Now you just lost $500, and those 4 winning trades for 100%, you still are down negative, $100. And the reason why you could sit back there and say, like, well, I wouldn't let it go that low. But the reality is I think you would, because especially when you go heavier, you don't want to cut it out, right? You don't want to cut that trade out because you want to try to hope that it turns around and gives you a break even at worst, and then at best, a decent profit. And that's what happens, right? Always the heavier they go and the losers you stay in tend to be bigger because you want them to turn around in some shape or form and give you that break even or profit. And that's the reason why I say, be consistent. Let's say that you did take that 5th trade for $100 and you let it go completely to zero. Well, you lost $100 there, but you won $400 on the 4 other trades collectively. So now you're up $300, right? That's why I say power of one is be patient, be consistent, and be disciplined. So now that we understand what the power of one kind of entails in a holistic view, let's kind of look at what could have transpired on Friday for you. And a lot of people don't realize that with just very minimal capital, you could have made great money in terms of percentages, right? And also in terms of actual dollars in the grand scheme of things, right? So what I'm going to show you is the option chain for a call and put 0DT on Friday SPY, and based on the game plan that we had laid out. And we're going to show you a couple scenarios that you could have looked at. And this is the chart on a 5-minute time frame as well. And let me just move these all over so we can have a little bit more of a reference when we are looking at the charts. A little bit more zoomed in, right? Okay, now we're good. Now let's do this. Okay, now we can move this over and it doesn't hinder our capabilities of looking at price. We'll keep it down here because this is calls and we're looking at the upside. Sorry, I apologize. This is actually the puts. We will look at puts as well. But we will first look at calls because that's the first move. All right, cool. So this is the 445 calls on 0DT for SPY as of yesterday, right? Right. So you saw my game plan. I said, look, if we break out of this falling wedge pattern, we're gonna look for daily highs, TS pivot, TS, and then weekly, and then and then also the TS2 pivot, right? So this is the 445 calls, 0 DTE. Let's say you got in an open because you were so confident based on the plan, right? Then you would have gotten for, you can see right here, 95 cents. Realistically, most people when they probably would have waited a few minutes to see what it was doing, and then you guys probably would, guys and girls would have slammed the options, right? So I put in $1.18 somewhere in the middle. You could have gotten $1 for 18, and let's say you took it to the daily high, right? The first target. Then you would have got in around, daily high. You would have scaled out. It would have been probably nothing crazy. I think $1, maybe $1.30, $1.35, $1.40. So you still would have made anywhere from 12 to 20, $22, right, per contract, which is not bad, about 10%, right? I know that sounds not very much, but you would have gotten in somewhere around here, and you would take it to the high, right? It's not a big movement right there. But let's say you didn't. You took it, and then you took it to the TS pivot. Right now, you would have gotten in for $1.18. Would have gotten $1.52 out of it, right? So your total contract, was worth $1.52. So you got in for $1.18. You got in for $1.52. You would have made $34 on that first move to the first zone, right? And that would have been roughly about 20%, right? I mean, $1.18. About 20-30%, somewhere around there. But let's say you held it. You held it because you're like, hey, at this moment, everything was telling you that it was still very bullish, right? I know, and especially with this candle, right? Look at that. Sellers pushed down and got pushed right back up on the 5 minute, and this became a shooting star. There's almost no head on this. It's pretty much almost turning into actually a body upside. In fact, it actually probably is because it's a white candle. With that said, that just shows you that there was a strong buying presence. And then the next candle was a massive up candle. But anyway, look, that's not the point of this. Let's say you took it to the 50%, the weekly, right? Now your contracts were $1.18. You took it to $2.11, right? So now you just made $92, right? $92 on that $1.18 contract is pretty much 78% win on that. But let's say you're like, hey, the plan was to take it to TS2 pivot if we see it continue on, and which we did. And then the max of that would have been 227, right? So you took $1 contract and you took it to 227, right? That would net you $1.09, right? $1.09, was pretty much what, like 90, I think 93% or something like that, 93, 94%. So you were almost made a 100% play on this, off of one. So that would give, at a bare minimum, you would have made like $20, $30, right? The maximum on that, given if you got in at 118 would have been 93, $94, somewhere around there, which is not bad, right? That's great. It's great turnaround. But that's just for the call side, right? So now you're taking one contract for $100, $118, and you would have made anywhere from 30 to pretty much $90-something, right? Not bad. Now let's go to the put side, right? So now that we know, and then we saw, and we know based on our analysis and based on the real-time data that, this was potentially time to start going short, right? And I explained in my tweet saying why this was a good short based on the hourly candle. We had an inside candle, and then we had a bearish flip on the hour. But anyway, so now let's go this side. We're going to move the charts over here a little bit so we can see. So this here is the 447 puts, 0 DTEs, right? And I gave you a lot of extreme examples. We're saying, let's say we got in at the tippy top here, right? That would have been 74 cents. Most probable that's not going to happen. Most people wouldn't have. Most people probably would have waited for the rejection off the pivot, pull back to the 50%, fail, and then taking it right around here, which was, as you can see at the bottom of my screen, 1040, right? So that would have been right around here, this candle here. That's, 5 minutes. 1, 2, 3, right? 1, 2, 3. So that price would have been right around 94 cents. You would have got a contract for 94 cents. And then most people would have taken down somewhere around this wave because this is the pivot zone, right? And then you can see that bounce back up, came back down, eventually broke. So let's just say you took it here and you got out. And it was for $1.42, right? So, you got in for what, 94 cents? And you got out for a $1.42. That's $48, right? $48 divided by 94, it's what, almost 50%, right? I think it's 51, 52%, somewhere around there. So you just made a 50% play, and that wasn't that long, right? That you can see that was literally 15 minutes. Within 15 minutes, you would have made 50% on this play, right? So you would have made $48 off of less than $100. But let's just say you held it because you're like, hey, this is seeming weak, or you just didn't get out in time and it was just so quick of a reversal, it came back up, and now you're just stuck holding it, right? And you're holding it. Well, it came back, came back down. You would have been negative. You can see that it went below the 74. It probably came to like 70 cents, maybe. So you would have been down maybe $20. But the beautiful part is because you're using P1, you're sizing down significantly. A lot of you probably would just laugh at being down $20, right? Because that's not a lot for you. Most of you are trading significantly higher than that. And you probably can let this whole entire contract go to worthless and not even worry about it, right? So the other thing is, let's say you held it and it came back up, right? It came back up around, 11:30, and that's why you're here, right? So this would have been around roughly about what, $1.30, let's say $1.30. So you would have been up again another $40, right? You missed the $50 in the first run. You could have gotten out for maybe $30 here. And then you missed it again and it came back down. You would have been down another $25, which is right here, right up here. And then it finally came back down somewhere around here, started consolidating. And you can see that, price was above where you entered, right? No matter what, it was always above where you entered. So you couldn't gotten out for, maybe a few dollars up to, potentially $40. And eventually around, 2 o'clock, that's when we started seeing that it was no longer going up. This may have been a good time to short. And if you held the shorts, you can see that on this big candle down here, if you would just got out there, it would have been $2, right? So you got in for $94 and you got out for $2, right? So it would have been $106, and that would have been 112% play right there. But for some reason, you see that it's weak, not coming up, and you want to ride down a little bit more, right? Right about this zone, not the bottom. That would have been $2.38, right? And you got it for 94, so that'd been $144 profit. And that would have turned into 150% play. And remember, that's, if we got in the whole time and held it, we're not getting on the absolute low, but, we were saying like somewhere in the middle. But let's say you didn't get in at 94 and you got in somewhere around here. Maybe you got in at $1.07, right? Right before this big drop. You got in here because these are 5-minute candles, right? You got in somewhere around here, right? It would have been $1.07. And then even when it ran to $2, right, that would have been $93, almost 100%. And if you would have kept riding it, like I said, it would have been to 238. So regardless, you would have made good money. And here's the thing, right? So I showed you that on the call side, you could have made anywhere from as little as like $25 to about $95, right? And then on the put side, you could have made as little as like, $40, as much as, $150, right? So on the call side, we could have made, with combining them still, you could have made pretty much a minimum of what, like $100 to a good, pretty much maximum of $250, right? I know that doesn't sound like a lot to you all, but we got to think about in terms of percentages and in terms of how much you invested in to get that, right? And when you look at that aspect, you're like, oh, that's actually a great number. So I'm going to show you this. I want to put this up on the screen for you guys and girls, and then kind of it puts things in perspective, right? So this was the option chain, right? And so these are calls, the 445 calls, and these are 447 puts, and these are the entries, right? All based on the chart I showed you earlier, right? And I was saying, look, and this is basically if you got in at certain points and whatnot, right? So I was saying, look, I know it's a little confusing, and you can pause the screen and go back and write this down and see what it is. I said, look, if you literally would have got, the entry at 95 cents, and you would have exited earliest, you would have made $57 profit. If you would have got in and you exit pretty much around the weekly, you would have made $116 profit. And if you would have got in out at the top, you would have made $132 profit. That's if you got in at open. But if you didn't, you got in somewhere in the middle that we talked about. You can see you made as low as $34 and you made as much as $109. Now, if we talk about the put side, saying that you got in at the absolute top here because you're just able to top tick everything, it would have been 74 cents. And you rode down this first wave, you would have made $68. If you didn't ride this first wave, you maybe rode down to this consolidation zone and stuff, then you would have made roughly $126. And then if you wrote it all the way down to this area, you would have made $164. Again, realistically, if most of you may not have, gotten up here, you might have gotten in somewhere around here, which would have been 94 cents. And then you would have made, you can see it, and then so on, right? And then let's just say you got in like right somewhere here. It would have been $1.07, and then you could have still made more money, right? But the whole point is this, right? The power of one shows you what you could do with very minimal investment. And I'm just going to put another chart up on your screen just to put things in perspective, right? And this is a correlation with this chart here. Let me just bring this to the front so that we don't keep seeing the charts. Okay, so like I said, this says that we would have gotten the call for 95 cents and we would exit at the earliest possible place right here. We would have made $57. And then if we would take in the earliest call or the earliest short and got out there as place, that would have been $68, right? We would have spent $169 and our return would have been $125. So 74% return, right? 74%. Right? I know this profit here doesn't seem sexy, but we're not focused on this, right? We're focused on this because I'll show you a little bit why later. 74% is what we're focused on. But like these are extremes, right? No, most people are not slamming calls at open and top taking a short, right? Realistic. And then, I did another thing where we said we, got out a little bit in the middle or the extremes and whatnot. If you top ticked it or you got in an open, you pretty much sold out at the top, you would have made $132. And you would have got in at the top short and you would have sold at the absolute bottom. You would have made $164, and your $169 would have turned into $296, which would give you 175% return, right? This was kind of like the most unrealistic scenario, right? That means you literally would have had to get it timed the long perfectly and time the short perfectly, right? But if you did, you would have gotten 175%, right? Which is phenomenal. Again, percentage. Let's focus on not P&L here, but the percentage. But then the realistic scenario probably would have been, we got, into calls at 118. And even if you got out at the earliest for $34 profit, and then you got into your puts in the middle, like most people would have, and you got at that absolute earliest, you would have got $35 in return. So you would have spent $107, and your return would have been, I apologize, it's not $107. It would have been $200 and something dollars, right? Let me do the quick math in my head. That's terrible math, guys and girls. It would have been $2.12. Sorry, let me readjust that real quick. That is not supposed. That was terrible math. There we go. That's better. So like I said, you would have gotten for 18 on the calls, and you would have 94 cents for the puts, right? And then you would have made a total of $69 for $212 investment. 33%. Now, I know people are like, oh, that's not good. But the reality is that's actually good. A lot of people, especially when they're going heavy, they pretty much are making this like 20 to 30%, right? Maybe 50%. And I'm talking about heavy. I'm not talking about, $1,000, right? I'm talking about a lot of people who will play, 50 to 100 cons. And this is kind of the average return for that, right? It's 33%. But again, see that's the whole point, right? Is that, look, at the worst, you would have made 33%. On average, you probably would have made, probably like 50%. But the power of one, you would have probably made a lot more in this. And that's the point, right? A lot of you are like, oh, 33% is not exactly great. But let's just kind of do a little bit simple math here for you, right? Look, you spent $212, you made $69. It's not bad, right? It's probably, in terms of percentages, it's phenomenal. It's probably more than what most of you are making on average going heavy, right? But let's just say, and you didn't spend $200. Let's say you spent $2,000, right? Times by 33. Now you made $660, right? I think a lot of you would be happy with that. Some of you are dropping $5,000, right? Now we're made $16,500. A lot of you be more happy with that. Some of you dropping $10,000. Now you're making $3,300, right? And so on, right? And let's just say you made a return of $7,400, right? Let's say you spent $5,000 and you times it by 74%, right? $3,700. That's the whole point, right? The whole point is this: if you use the power of one, you just literally drop $200. You would have made $69 on Friday, right? I know that doesn't sound like a lot, but let's just say you do $69 every single day, for an entire trading year. Well, there's 259 trading days in a year, or 250, anywhere from 250 to 252, depending on February and whatnot, and how the holidays fall. But let's say 250, right? Well, now that's $17,250 you would have made in 1 year, right? And that wasn't very stressful work, right? You can see that this was pretty much the worst that you could have done. That means that you would have gotten here, and you would have exited right here, right? That would have been a quick 5-minute play, and that meant you would have gotten in somewhere around here and got out here, another 5-10 minute play. So about 15 to 30 minutes, you made $69. And I'll tell you, minimum wage in America is $15. So you would have made $69 in 30 or so minutes or less, right? And if you were able to hold, you could have made, like I said, you could have made pretty much, let's say you got in for $1.18 and you held to this weekly, right? Now that would have given you $93 profit. And then let's say the put, you got in here, you got into the puts, for 94 cents, somewhere around here, and you held it through this first one, this big candle down, and you got out, right? That would have got you $1.06. So you would have made 93 plus $1.06, right? So what is that? $1.06 plus 93, right? $1.99. Pretty much $200, right? And your investment again would have been $212, right? Divided by 212, you made 93% profit, right? And if we just keep it as $212, right? If you're able to make $212 times by 250 a year, right? What's $53,000 a year, right? And for 30 or so minutes worth of work. And that's why I say the power of one would be beautiful for a lot of you. It just means that you're sizing to appropriate size. Does not mean you're sizing one. Let's say you were a person that originally traded 50 contracts. Now you go down to 10 contracts, right? 10 contracts still would have been, beautiful thing, right? You can see that 10 contracts here, this is one each, right? This is one each. 10 contracts up, 10 contracts down, right? So, you would have made $340 and, essentially $690 off of $2,120. So not bad, right? And then like the string example, you would not extreme, but if we said that you made an average of $199 because you did the middle, you would have made $2,000. Yeah. So that's why I'm saying, like, utilize the power of one, and you can see how powerful it is. And we do that every single day, right? Power of one works here as well. The up and down and up. But power of one on Friday, literally, just playing 2 contracts for a minimal of $200 would have netted you at worst, if you held, because you're not getting here and selling out right here, right? You're gonna, as a trader, you'll be able to hold through certain things. And plus, this was such a quick move. Anything you could have gotten here, which would have been that first exit, and then you held through and eventually got up here. And if you got here, you would have got out here for the short, and that still would have gave you $50. I showed you on the screen already. So that's why I said there is a lot of money to be made, and with little investment, right? I just showed you that, with, literally $200, you could have made 33%, and it's not bad. That's why I said focus on the percentage, not the actual P&L, right? Because if you keep focusing on, well, $30 up and $30 down is not a lot, right? Look, to some people it's not. I understand that. But for a majority of people who are, looking to be consistent, just ask yourself every single day, if I make 33% of my trades, $69. I just showed you 17.2 or something like that. And then eventually you might be able to 100% that, right? You're going to make $200 a day. And that showed you that was like 52,000 and some change. And eventually with, you might size up and you can start making $400 or $500 a day, right? So it's just, it all adds up. And that's why the power of one is very, very powerful, right? And that, let me just show you one more thing really, really quickly. So this is a, projection. If you make $50 a day, you make $12,500 a year. You make $100 a day, you make $25. You make $250, you make $625. You make $500 a day, you make $125K a year. You make $1,000 a day, you make $250,000. And I know that's probably shocking to a lot of you. Like it's mind-boggling because a lot of you are probably saying that you make more than $1,000 a day, and sometimes you just greedy and you're bad because you're like, oh, you don't feel like 1,000 is a lot, and you're then giving it up, goes to 500, 250, 150, and eventually becomes red. But the point is, if you're able to see this now, you can see that using the P1, process, you will be able to see these gains and they'll compound, right? Again, look in the future, look in the long term, not, hey, look, what did I make today, right? And look at the percentages, right? Because, the whole thing is, if we just go back to mathematics, right? And we just say, $100 and I made, 33%, right? Sorry, let's get a decimal in there. It's $33, right? I know that doesn't sound much. Well, then, but we'll say that we're doing that for 250 days, right? That's 82.5, right? Ask yourself again, if somebody came up to you and wrote you a blank check for 8,200, would you take it today? And I think most of you would say yes. And, $33 on a $100 play is not very hard, right? Most of you could sit through this. You would have like, okay, $33, taking it. And same thing, $40 on downside, right? And what the P1 allows you to do is it allows you to preserve your capital, allows you to preserve your buying power to come back and maybe take another shot. Because most of you like to go, full port on this trade, and maybe you got in a little bit late, you got in above the daily high, you couldn't get out quick enough, and then you pull around here, you got scared. This would have been probably this, if you got in at the high here and you got here, you would have been down. Let's see. I can tell you exactly how much you would have been down. Right? Let's just look at this. So you would have gotten in, rather than daily high, or which is probably let's say $1.18. This came back down. This would have been probably what, $1.07, $1.05, right? You went full port. Let's say you went, it wasn't $100. Let's say got $1.18. You got it was $1.10. You would have been down $8, right? If you went down, $1,000, you would have been down $80. You went down $10,000, you would have been down $800, right? And most people will be nervous with that. Like, oh man, it's getting, and especially here, you think it's keep coming down, right? You would probably gotten out. But with P1, with a pro size, you would have been able to sit through all this. So anyway, boys and girls, that's kind of the video. I want to show you that, the power of one, it works, and it can allow you to sit through a lot of these pullbacks, a lot of these consolidations, and take advantage of it and make good money with very little investment, right? That's the reason why I showed you this this chart right here, right? I showed you this chart, right? This will show you, right? You don't need to make a lot of money to make good money, right? $100 a day gets you 25K. I think a lot of you are probably doing that now. A lot of you are probably fitting between this range, $250 to $1,000 in terms of daily day trading profits. So you can make $62,000 to up to $250,000 a year, right? So just keep that in mind going forward. But again, just want to show you what little money can do with the right mindset. Again, ladies and gentlemen, subscribe, turn on notification, hit that like. Thanks. Bye.